Hello guys. Hey guys. So it's been a little bit since my last episode, and so when I put in some trades, the only difference between what I said in last episode and this episode was I actually switched my amount for Coke and Disney. I did it at the last second because as I was putting it in, I was like, I want to be a little bit safer, and so I switched the amounts kind of like last second, like as I was putting it in, because I was like, I know Coke's gonna go up, or I have a very strong feeling that Coke's gonna go up. And so, and I mentioned in the last episode, like, if you want to be super safe, put most of your money in SPY, because that's like a safer prediction. And so I thought, you know what, I should do that. And I was looking into options and all that, and I didn't want to include all that in the video because I was like, I don't want to overload, but it still had every bit of my process. It was just like, I was like, for me personally, maybe I should be like a little safer. But the only difference was that I switched Disney and Coke. But anyways, so now we are like, it's like a week later, and almost a week later, and I just wanted to revisit these things. Obviously, I've been watching them. And then like yesterday, there was a big hit in the market. Like the Dow's down, and I think Nasdaq's down. I think all the major markets are overall negative, pretty big yesterday, and I guess today too, by the looks of it. So it's still kind of early in the morning-ish. It's 11 right now. The market's open, but let's check in to see like how my trades are doing, and if I might get out in some of them right now, by the looks of some of them. But I just wanted to go back and talk about them, because just because you put the trade in does not mean you're done trading. You'll just wait for it to hit your take profit or stop loss. You have to make judgment calls, and I think I'm gonna have to make some today. So let's take a look. Okay, so Disney. Honestly, by the looks of it, I think I will close out today. The loss of momentum is gone in the price action. The MACD is saying that that the sellers are taking over the buyers, and the volume doesn't look too attractive. So it's hit the peak. It's done its little bit of hugging that it like kind of normally does, and now it's jumped off. And so in the recent history, it's kind of shown that it does a reversal after it hugs for a little bit. So I think it's time to get out of Disney, to be honest. Probably gonna do that. Looking at Coke looks fine to maybe stay a little bit, to be honest. This one big candle right here might prompt a reversal. Because things looked like it was kind of slowing down, but then it kind of sped up, or it rose up quite a bit. So this might prompt a lot of the people that bought in earlier to be like, oh well, okay, I'm gonna take profit now. So, and I'm happy with the gains that I got from Coke. It falls in line with what I normally get, and I think it's important to be satisfied with what you get. And like if I were to take my money out of Coke now, I would be satisfied, and that's much better than holding on a little bit longer and then like losing money and just being like, regret. But I might revisit that in a second. Okay, so what else did I buy? Hey guys, so after the video, I realized that I did not mark Amazon. So here it is. So here's my Amazon trade. This was April 5th. I'm looking at it right now when I got out, the day that the rest of this video is from. It was April 5th, and I sold it. Let's see, I put in 1,000. I took it out at $994.44, and a quick calculation will show that's 0.55%. So 0.5% loss here is what I got. So like it was like somewhere in here during the day when I took it out, when I was making the rest of the video. So I forgot to mark it, and so I didn't review it. And but yeah, when I was selling everything else, I noticed that my brokerage like, oh, I have Amazon, so I closed out. My bad. I also bought Netflix. I think it's time to cut my losses with Netflix. I mean, I still make a tiny bit of profit, but there seems to be... It's just at the beginning of a reversal right here. Or do I think this is a correction? I have to think about this. This could just be a little correction, because like this is the new like little minimum right here, right at this point, because it went up, and then it went down, and then it went up. And so if there's another candle and it's positive, then this was just a correction. But MACD is showing it's kind of reached a high for buyers, and it's showing that if I wanted to be safe, the MACD is really saying like the buyers are done and the sellers are just starting out. So I might want to cut. I might want to just take this profit here at Netflix. And like this doesn't look too appealing, right? Because like look at this. I thought, oh hey, it's gonna go up there because of because like I based it off this line, but I wanted to be a little bit more conservative, so I used like the average of the price here before it reached that that resistance up here. So I thought like, oh yeah, there's no shame in closing out your position to make sure that you definitely don't lose money. The goal is, if you don't lose money and you're trading, you're doing great. If you're making anything at all, you're doing fantastic. Okay, so keep that in mind. And like me getting like this tiny little amount right here, it's fine. It's honestly fine. I tried, and I'm gonna make a profit. That's fantastic. That's fine. SPY, let's see how SPY did. SPY did great. This would have been a perfect trade. This would have been perfect. Actually perfect. I actually predicted this pretty perfect. Pretty perfect, Jude. So, you know what? Sometimes you gotta give yourself a pat on the back for making a perfect prediction. A good prediction. A great position. Prediction. So, hey, I gotta take that as a win. I mean, I didn't invest in SPY, but I saw it though. I saw it, and sometimes you can say in your head, you'll look at a chart, you'll be like, I think it'll go here, blah, blah, blah. But it's a totally different step. If you actually do the work, you put in your, you put in the take profit and stop loss, like you actually put a visual to it. And I did, and it was right. Good job, Jude. American Express. This is tough. Okay, so it's dipped down. It's dipped down, and it seems to be at the beginning. I mean, according to MACD, that's gonna keep going down. But this is tough. This is tough. Part of me wants to hold on. Because this is kind of like the new low right here. These two candles didn't go any further than this, and so it might go lower, but then it's still, the lows are getting higher according to this. Like the low is here, and then the low is here, and then the low is basically the same as this one. So there's a chance that this might be the new low, so it might go back up from here. But looking at MACD is suggesting it's not done yet. MACD isn't always correct. It's not always right. Sometimes it gets a little wonky. Like look right here. Like see how this is like curving down? It did the same thing here. It did the same thing here. And then it continued to go up. But I mean, if you look at going up doesn't mean the price is going to go up. I mean, look at this. It stayed the same. It stayed bracketed this entire time while the MACD was going up. So this is a tough call, and I think I'm going to revisit it in a second. But let me look at Amgen. Oh, look at that. Look at that. I think I'm going to take the profit here, because I'm satisfied with this. And honestly, this candle, this is just too big of a run. I just think it's overdue. Like there's going to be a reversal, or at least a correction. And like, I don't see this clear of a positive trend anywhere in the recent past. So I feel like a lot of people are going to be like, oh, yep, I'm done. Oh, there was this, and that was kind of wild. But then there was like a pretty nasty reversal. So I think I'm going to close out at Amgen. I'm happy. I'm happy with those gains. Let's look at, okay, so the ones in red, if you remember, I marked those red because I wanted more information. I wasn't sure what was going to happen. I didn't set a take profit or stop loss. So I did kind of hurt myself there. I probably should have, well, I didn't set a take profit or stop loss because I wouldn't have put a trade in. So I don't know. And I didn't really like return back to them. So kind of just no help there. Intel, I did not invest in Intel, but I still set this. And if I did invest in Intel, I think I would be getting out now for the same reasons. Like the momentum is going down, and I still would be taking a profit here. It's just, and ignore, by the way, my bad. This might have been confusing people. I set the trade length like way too long. Like I was not thinking about that at all. The trade length, because like I should be, you know, that's something I should be doing, to be honest. In the last episode, I did talk about like, I'm not going to talk about time, because like time is so hard to predict, like the length of a trade. And I also didn't want to talk about it because I didn't want to overload you guys. I wanted to focus on everything else that I mentioned, you know, mostly risk management, mostly like some of the strategies and like stuff like that. I just wanted to focus on that, and then putting another factor of time in there that is just so hard to predict, I think would have been too much. So on a later episode, I am going to talk about that more. And so like I just made these trades like arbitrary, the length arbitrary, and it is kind of like arbitrary because you don't know what's going to happen, and so you need to look at it and think, make judgments. Should I get out early? Should I get out now? Because it's not about waiting till it gets here or here. Not at all. Not even close. So I really don't want you to get that impression. It's there to guide my way of thinking, and then to watch it go along for the ride, and then make assessments based off of your past thinking. Because this setup that you've put here, these little boxes, are it's a representation of all the work, all the technical analysis, all the quantitative analysis, all your research that you did. It all is put into these two boxes. And so you don't have to go back, when you're looking back at it, you don't have to go back and rethink all your whole strategy. You just have to look at these boxes, and that's all you're doing. So that's the whole point of it, and to make these judgments now a little bit quicker without considering all the past work that you did. So if I did get into Intel, yeah, I'd be getting out right now. And you know, I mentioned earlier that like right now the market is kind of like going down. I mean, it probably won't last more than a couple days, but and you'll notice I have said like I am getting out a lot right now, and it's not because I'm panicking. It's not like, oh god, I just want to get out because I'm afraid it's going to go down lower. That's not why I'm getting out. I'm getting out because I don't know how much lower it's going down. When you're uncertain about the direction, you want to get out, and that's my point. Like, and I've still explained, like I've talked about like I'm satisfied with the current gains, so I'm getting out. I've talked about how I'm uncertain where this is going to go, and in fact it even looks like it's going to go down. So if I wasn't Intel, I would get out at this time. Again, this is not trading advice. I'm just talking about what I'm gonna do. But talking about the reasons, because it's you're not gonna gain anything if I'm telling you like, I'm looking at these shapes and I'm saying I'm gonna stay in or I'm gonna get out. That's not gonna help you. I really need to explain why. And the big picture is, I don't know what's happening next. And if I really don't know, or I don't like what I think is gonna happen next, that's generally when you should probably get out of your trade. Okay, let's look at CRM. CRM did not go the way that I wanted. I mean, I didn't invest in CRM, but I was considering it. I mean, yeah, I'm pretty sure I know why I didn't want to invest, because like the MACD was already so high relative, like the average price was already high for pretty long. So this was the start to it. I was assuming this was there's about to be a much bigger trend, and it was gonna start soon. So I think it was like, it was a little better than a trade that wasn't ready yet. Like I think it was like maybe ready soon, or I might be getting at the very beginning of it, because this very well right now, where it's at right now, it very well could be the support, the new support, because it's been gradually going up. It is a little high for my taste. Like I think the it's been hovering at like a high level for the buyers for a while. So I think there is a lot of potential for more sellers to come in and drive down the price. So I think that made me uncomfortable. But it is going up, and I do see some supports, like a rising supports here. So I think I still made that prediction there. So, but I wasn't sure and I wasn't comfortable, and that's why I didn't get into it. And right now, I think it's still too early to tell, like, would that trade have been good or not? Because yeah, it's gone down, but this could be the new support, just like this was the new support and this was the new support, and so on and so on. So I think I said I was gonna pretty much get out of every trade. I think that's what I said. Because the momentum is going down and I don't like it. Coke, I could wait a little bit longer, but if I'm being honest, this trend size looks pretty similar to most of the past trend sizes. I mean, this is a little smaller, this one's a little bigger. I got in here, but you gotta look at when the trend started. I could wait. The thing is, if the market is going down, Coke is in like so many index funds and ETFs that, like, if people are getting out, or they're pulling out, or they're panicking a little bit, that's gonna ruin my fund. And Coke is in those ETFs and those index funds for sure. So even though Coke itself might be doing great because it's like associated, or it's like tied, you could say, to like the ETFs or the index funds, it might be dragged down with everyone else. And also, I like to, like, when there's any kind of hysteria, good, up or down in the market, I kind of like to just like get out. And it's not a panic, it's procedural. It's because I don't know what's going to happen next. When there's a lot going on, and it's unpredictable, I don't like to trade. Or at least I like to clean my slate, or I like to start on a new clean slate. I like to get everything out, and then I like to reassess everything else. So I make sure that my mind is clear, and everything's good. So this is a tough call though. Definitely getting out of Disney. I need some brain power. I have like a whole thing of food in front of me. This probably looks disgusting to you guys because it's like a, I don't know. It's the healthiest thing that I can make. Anyways, never mind. So Disney. Okay, let's look at a. I want to look at a smaller time frame to see what the trends are looking like there. And it is looking like, yes, there has been a decline, but the momentum is slowing. Like the negative trend is slowing down. That usually means the positive trend is about to speed up or about to take over. So it did go all the way down here and then it's risen back up. So maybe I'll wait till the end of the day. It's 11 o'clock right now. I might wait till 4. And another thing I could do, a rolling exit, or it's also known as pyramiding, where I take a little bit out at a time. And because I don't know, I'm more those strategies of getting out and getting in, you can do it. Pyramiding is more of like considering getting in and getting out with little bits at a time. That's just a lot for me. Like that's just like, I just don't want to do that, to be honest. Like, does it make you a better trader? Yeah, probably, but I don't want to do that. And like, does that make me lazy? I don't know. I don't know. Maybe later down, and I'll keep thinking about it. Maybe later down the road, I might want to start doing more of that. But like, I feel like my time frame is a little too short for those exit and entry strategies. So yeah, for Disney, I'm gonna wait till the end of the day to see if this really was like a new support. And then Coke. Coke, I am also going to wait till the end of the day to see what happens. I kind of expect there to be a little correction here. So it might go down a little bit more. So if that's the case, I mean, this is the hardest part. I'm not gonna, I almost like clicked on the news for advice. That's never a good idea. So I'm not gonna click it. You know what? I gotta go back to what I said earlier. If I'm satisfied, I made profits, I should be happy with it. And like I said earlier, like the ETFs and the index funds might drag Coke down. And I don't know what's gonna happen. And it could dip down and continue going back up, or it could not. This could be it. So you know what? I am going to get out. I've just made up my mind. I am going to get out of Coke. I'm going to do that right after this. Netflix. Oh yeah, 100%. I got to get out. Yeah. Yeah, I'm out of Netflix. Although this is a pretty big candle. There might be a reversal. And this is the... It's like right... It's like right here. Right next to this candle that was acted as like a little support somewhat. I'm relying on some pretty very particular technical analysis here, but If it goes up, today is such a bad day for Netflix that tomorrow might be the reversal. So waiting till the end of the day to see if this is a support might not be an option. People might just be like, yeah, today's a bad day for Netflix, forget about it. And so people aren't going to buy in, and then people are going to keep, like, it's going to be low volume selling. And then tomorrow people might buy, or at the end of the day today, at the very end, like last 30 minutes, people might be buying. Do I want to mess with that? It's pretty hard to predict. Probably shouldn't. Yes. Should I stick with American Express? Should I hold on to it? Because I think... Let's look. Let's take a closer look. It does look like on a 1 hour chart, it is about to maybe start trending long. I might want to wait till the end of the day. That one I can kind of wait out for a little bit longer. American Express I can kind of wait because I kind of was expecting, I put such a low stop loss because I was kind of expecting it to dip down. So that's important to remember. Whereas like other ones, like, I don't know. Which ones did I put? I put like shorter stop losses on others because I expected it to like not go down so much. And so if it did, then I was like, oh, no, I was wrong. Okay, never mind. Let's get out. Okay, all these have pretty big stop losses. But there was one of them. I don't remember. Maybe it was like one I didn't. Was it in? Nope. There's one of them, I swear, that I did that I was like, oh, okay, it was this one. Where like it's either done trending, and so then I really need to get out if it gets like past here, or it's gonna continue for a while. So I was looking at Amgen. Oh wait, no, I was not. I was looking at American Express. So I think I have a while. I'm gonna wait it out. I'm gonna wait till about here. So you know what I'm gonna do actually? I am going to change my stop loss to here. So I'm gonna be more impatient with my losses with American Express. And I think this is another thing I really want to talk about, and probably the most important part of this episode is changing your according to what's changed. Like, you know, now, like when we started this, I was right here and I only know like this much. Now we've gained this information. So how does that change things? Because it always will change things. Change your idea for when you should get in, when you should get out. I mean, sorry, when you should get out, because you should already be in the trade by now. So now I think like, okay, this must be the new support. So I am going to adjust. I don't think I'm going to adjust my take profit though. Now this is definitely going to change. I am now going to switch this from here, or from like here to here, because if it gets there, I'm definitely not going to like wait till it goes all the way down there. That'd be ridiculous. And in fact, I did say that I am just going to close out of Amgen. Why, Jude? Why are you gonna get out of Amgen? Are you scared? Scared? I honestly think it's peaked. I really do think it's peaked. It's gone past the Bollinger Band just like way too many times, I think. And when it does that, there's reversals. I mean, you see it several times, like past the Bollinger Band, and then it had this big correction here, but then it like went back up. I don't know. Amgen's kind of wild, I guess. I don't know. I'm happy with this. I'm happy to take this and call it a day, to be honest. And like, how do you know when you're happy with something, you're satisfied with a certain amount of gain? Experience. Like some people set things like, if I can get like 1% every few days, you kind of got to do that, because if you keep trying to strive for like, you can strive for more to like get better and like be like, you know what, I've been trading a while and I've been doing like 1.5% every 3 days. Maybe I should really be going for like 2% a day, 2% every 3 days. Then yeah, go for it. Come up with a strategy and try to figure out what are your weaknesses, and if you can do anything to try to do that with your current strategy, because there are some strategies where that's not going to happen. It's just way too hard. You can usually do something like that on that short of a time frame, more if you're like day trading or if you're like weekly trading. Obviously if you trade on a much longer time frame, so something like, I don't know, you're looking at like a 1-day chart and your trades are like a month to 5 months, then you're not going to be thinking about per day gains. Or maybe even not even per week gains. So I'm satisfied with this. I'm gonna get out of Amgen. I'm happy with it. I'm gonna stay in American Express. Netflix, I'm gonna wait till the end of the day. Coke, I'm gonna wait till the end of the day. Disney, I said I was gonna wait till the end of the day. If you remember at the beginning of the episode, I said that I switched Coke and Disney to be more conservative. So the 4K that I was supposed to put in Disney, I put in Coke. And so I might want to secure those gains here, because I was like, I might wait, but I might want to just like lock those in, but I might stay in Disney. And then something you could do is something I might do, I should say, because this is not trading advice, is if I do see like this was in fact like a new support and I start seeing some like positive candles here, and then I see the MACD going up, I see more signals of like, oh yeah, this is going to keep going. I want to take some of that Coke cash and put it into Disney. Just a little bit. Just a little, like, just, you know. So I might do that, trading strategy. All right, so I'm going to go do that. Set new stop losses. Disney, obviously I got to change as well. Like this is like now like here. I'm going to get out of Coke anyways, so doesn't really matter. I'm not going to adjust that. But if I were to adjust that, I would actually like just completely redo this. And oh, I can't. Okay, so honestly, I would just like change things so that it's like, I am going to get out of Coke, so I'm just going to like mess with this. Oh no, wait, can I go back? Okay, there we go. Okay, well that's where that is. So that's where, like, so we're here now, and I would set it like here, and then this wouldn't change because this take profit was based off of this line right here. So so I would still keep it there somewhat, but then oh no, it was here at this average of here. So I would probably change things to here, and it's so close that I'm like, you know what? I think it's more like I'm just gonna get out because of that reason, like, as well. Like, I had my reasons before, but now, like, my take profit was around here, right? Or did I have it there? I'm pretty sure it was here. Whatever. Anyways, it's so close to that, and honestly, I feel like I have more to lose than more to gain. So, yeah. All right. Well, I hope this episode was helpful. This is an extremely important part of trading. To be honest, 90% of traders lose money, and I think this episode explains exactly like why. Like, if you don't do this, if you don't consider these thoughts of when to get out, or let's say you're halfway there and you're setting your take profits and stop losses, but then you're just waiting for it to reach one or the other, you're probably that's not good. You could be doing just a little bit more work, and you could be being strategic in your closing out your trade. So I think this is really where the fine tuning is, and that makes it sound small. No, it's some big tuning. It's not some fine tuning. It's like big, like the dial isn't this big. Dial's like this big. It's pretty important. So thanks for watching. I hope you learned a lot. And I'm gonna go do what I said I was gonna do. Close out and wait till the end of the day to look at Disney and such. So thanks. See you guys in the next episode.